Good morning everyone, Cryptomon speaking. Today is Friday, December 18th, and we are in for a new daily crypto news. So first of all, we'll do a quick recap of the crypto market cap and the different things happening over the past 24 hours. Then we'll talk about basically a sum up of the 2020, which is the DeFi boom and what it drove, either new users and a lot of new capital into the space. We're gonna then talk about the big news of yesterday, which was Compound's new blockchain announcement. They are thinking and will develop their own chain to try to resolve a bunch of shortcomings currently on the Ethereum network. Then we will finally talk about why did Bitcoin transaction fees went so high over the weekend, mostly on Sunday when we had the big candle up. So let's get to it, guys. So the current market cap of the cryptocurrency space is at $664 billion. Bitcoin is solidly sitting ahead and north of 23k. We have ETH that is also sitting at a solid $650. So what happened over the past 24 hours? We went south of 23k and then bounced back, and now we're trying to consolidate ahead of this support or resistance, depending how you see it. What's important to look at is actually the volumes that have been really trending up over the past 2 days. On the 16th, we had $2.9 billion of volumes in different exchanges, and yesterday we had 3.6, so it's trending up. It should kind of, let's say, calm down over the next few days, but overall volatility has been trending back up, and this is normal considering the recent price moves. And the big news, of course, is still ETH DeFi, with the USD value locked in DeFi, actually at all-time high, over $70 billion, even if the numbers of ETH or Bitcoin being locked up in DeFi project is actually stable, even like lowering a bit in terms of ETH and BTC numbers. The recap of the day has been the DeFi boom that drove a 1200 increase in DApp volumes, which is nobody would have thought so. Beginning of 2020, the transaction volumes of DeFi have been at 270 billions, up 1200% year on year, and we have to say that ETH is a big winner, as 95% of these volumes have been on its network. Top 10 dApps also were DeFi dApps for the most part, with DeFi Swap, for example, Uniswap, Compound being kind of the biggest one in the space. What also happened a lot in 2020, and we need to focus on that maybe for the next year, especially if more retail investors are coming in, it's the number of hacks and the severity of each one of these hacks. There has been more than 12 major hacks over 2020, with more than $120 million being stolen. This is something really the space has to work on, especially with regulators being more aware of what's going on in the DeFi space. We definitely do not want a narrative like they tried to put on Bitcoin, which kind of felt that it's only to launder money. We have also the biggest news. It's the fact that Compound's new blockchain is getting ready for DeFi, and what it intends to do is to be an application specific for money market, and it will be working across multiple networks. It tries to address 3 limitations that they see of the current version of Compound on ETH. Basically, first limitation, we all know about it, gas costs that have at some time been really expensive. Second limitation is the inability to serve assets on other chains, so cross chains kind of lending, swapping, and borrowing. And third is that the fact that all supported assets aggregates the risk of each supported asset, meaning that you have to trust a lot of, I would believe, synthetic asset when you try to price another asset, or if you want to bring other assets such as, for example, CBDCs or other tokens, maybe representing stocks or whatever. You have to make a synthetic version of it, and with what I understood, what they would want to do is maybe to bring the real assets or to cross-operate with the real assets in order to limit the risk of third-party or protocol risk. To do so, they also plan to launch a new token called Cash. This Cash will be some kind of DAI. It will be minted as DAI basically, and will serve as, at least at the beginning, will be pegged to the USD, and you will mint it as DAI, meaning that you will have to put collateral to create it. There will be some kind of debt. They published a white paper, at least the first version, really thorough. Same thing. I will really advise you to look at it if you're interested in Compound and in the future of DeFi and maybe of this chain. So why did Bitcoin transaction fees double this week? It's really quite simple, nothing really interesting in this article. A sharp increase in the number of daily transactions led to higher average fees. It's 2018 all over again, and it does not mean decentralization does not mean no fees. It means that you are working with a decentralized, at least as much as it can be, a set of validators, and to secure the networks you need to pay fees, and it went as high as $2.7 on Sunday for a transaction cent, for a Bitcoin transaction cent, and as it's not as high as what we've seen on ETH. Clearly during the DeFi craze, it's still something to look at, but in the long term, if we have such a high amount of transaction in the Bitcoin network, we should see other Bitcoins plugging in to get some share of these rewards. And last that I did not mention in the summary is, and to remind you to be really, really careful with all these DeFi projects, it's a WAP Finance that has been hit with the $8 million DeFi flash loan attacks. We really know all about this. This time they use like 3 different stablecoins protocols and other exchanges, DEXs, and AMM exchanges such as Uniswap. So it's something that's becoming more and more common, and so please always be wary and do not put all your eggs in the same basket. So this is all for today, and I'll talk to you on Monday. Until then, stay safe and have fun this weekend. Bye bye.